Doug McIntyre here. I am with Lee Jackson, who is our editor for everything that has to do with the economy, the stock market, finance, and even commodities. Today, we're going to talk about the price of oil. For a little context, at the start of this year, oil was about $71. It just went above 81. So, it's not super expensive. But let's take a look at some of the circumstances. If we go back to June 2022, crude hit $100 and gasoline in the United States for a gallon of regular hit $5. Now, the reason for that was geopolitical. It was not typical, drilling and China needs more oil. The invasion of Ukraine, Russia's a huge oil supplier.
Yes.
Started to see sanctions put on their oil. So now you've got a real question of whether you've got a supply problem. That sort of drifted off. It never turned out that Russian oil was absolutely critical to oil being at, say, $70. So now we're back here, end of March 2024. Why are we at $80?
Well, I mean, there's a lot of reasons for that, but not the least of which is that OPEC has continued to keep huge production cuts in place. It was like 1 million barrels per day. And they have continued to renew those cuts because they're not happy. 70 is a basement for them, a basement level for OPEC. And then you start to add in last October with the Hamas attack on Israel. Well, then you start to get the Red Sea shut down. So shipping that goes through there starts to tie up. And at first, it really didn't seem to be pushing prices higher. But there's a good chance that if things continue to escalate, and Israel has given no indication they're going to back down until Hamas is finished, we could continue to see prices go back to the 100 and higher levels that they were in 2022.
There are two other problems. One is related to something you said. The U.S. armed forces, along with our allies, we have a lot of warships in the Red Sea, have not been able to completely prevent missile attacks on ships. We've had one ship sink. It was not an oil tanker. It had fertilizer in it. But what it does is it proves that the rebels actually can sink a ship. And so the big shipping companies are simply saying, look, it's going to take an extra 10 days to send a ship, oil tanker, from Europe, the U.S., around to Asia. They've now got to go all the way down below the Cape of Good Hope, South Africa.
Right, exactly.
Up the east coast of Africa to get to Asia. That does two things. It hurts the supply chain, obviously.
Of course.
The other one is just the cost of having those ships at sea that long. Is expensive for the shippers, but it also uses up a lot of oil.
I mean, absolutely.
Those things burn tons of energy as they go. The other thing, another geopolitical wrinkle in this, which is new, is the Ukrainians have become adroit at using drones to attack Russian production facilities.
Yeah.
And as you know, I think last year Russia was the third largest producer of oil in the world. It may not have gone to Europe. It may have gone to India and China. But if you start to see military strikes on those facilities start to take down production, you will see a spike in oil.
Well, and what if you start to see military strikes on installations in Iran? Because Iran, we're in two proxy wars here, by default, which seems like we always are. But Iran is the one that continues to back Hezbollah. And if it was probably any other administration except the current one, they probably would have leveled some of Iran's facilities and refining facilities already. And if that happens, what if Iran starts aiming at Saudi facilities? It could feed on itself, and that's where it could really, really get ugly.
It could. So let's look at the other side of this. In December, the United States produced more oil in a month than any country in history. Any country ever. Does Saudi Arabia? Nobody. Venezuela, Mexico. We set the all-time record for any month. The United States has become, we are the 600-pound gorilla now in the oil industry.
We really are. Well, and another thing, it makes you wonder, when are they going to start filling the strategic reserves back up in an effort to keep prices down, which it didn't do? You know, the president ordered, we're at the lowest level in the SPRs since what, 1984, 1988?
Long time, yeah.
What if they start to fill that back up? And then there's more demand, and you know they're trying to fill that back up, because you can bet a new administration would start to fill that up right away. And they should have done it when it slipped to 67.
Well, something else interesting has happened. I mean, the frackers are like the Saudis. There's a price point at which it's no longer profitable for them to frack. Right now, we're well above that price point. And the last statistics I saw show that 2/3 of the oil being produced by the United States right now is fracking.
It is. And the great bulk of that coming out of the Permian Basin and the Williston. And but again, you know, a lot of this is going to depend on politics. You know, the state of Colorado basically saying, well, okay, no more energy, yet it's, you know, 10% of their total revenue. And I can't believe that politics, given the worldwide geopolitical situation, is also playing into this.
Yeah. So I'll throw you a curve here, because there's been a lot of written about this in the last week. Artificial intelligence can make drilling for oil, both finding it and drilling for it in the least expensive way possible, much easier. In other words, artificial intelligence can be so sophisticated that it can beat what any engineer can do by themselves on making decisions where to drill, when to drill, how deep to drill. Right. So we may actually see a new generation of efficiency when it comes for drilling for oil.
I think it's entirely possible. And, you know, the people that run Chevron and Exxon, and these are extremely bright people, that most of whom have been in the oil business their entire life. If they can find a more effective way, you can bet they'll do it, especially in areas where it's so prohibitive, like the Arctic, which has kind of been put on hold. But can you imagine the AI success up in the Arctic, where they think there's billions and billions and billions of barrels of oil reserves?
There are also some real wild cards here, and I'm going to start with Venezuela. Venezuela used to be one of the leading oil producers, and I believe still has the largest proven reserves of any country in the world in terms of oil available.
I think that's correct.
The U.S. shut down our relationship with them, basically sanctioned them to the end of the world. There's a crack in that door now. It's the big oil guys can go in again. The infrastructure for drilling and producing and moving oil in Venezuela has aged. But
indeed. Yeah, sure.
If there's money to be made there, I think Venezuela could come online as another major supplier within the next year or 2 years.
Yeah, I don't think there's any doubt of that. And, you know, back to the Saudis and back to OPEC Plus, it's they see all this. You know, they see this as well. And so they're thinking, well, are we going to have to keep our production cuts in forever, or do we have to make them even deeper? You know, they'll look to other people to help out.
They will look to other people to help out. The other aspect of this is the speed at which renewables have not come up to speed. I mean, there was a strong belief for a long time that our use of oil and coal would be much less than it is today, and it hasn't happened.
No, well, it's the same fallacy as the electric vehicle. You know, it's like, we'll all be in an electric vehicle by 2035. And then it's like, people saw what happened this winter in these extremely cold situations, and there's no charging stations. If I saw an interesting thing where if somebody said, if we were totally EV now, and somebody came up with the internal combustion engine that would go farther on, fill up faster, I mean, people would immediately revert to the internal combustion engine. So yeah, I think it's going to be, the future will be interesting. And look at how the Euros, they were going to, well, we're going to get rid of all this coal and we're going to do this and we're going to do that. And then they're like, uh-oh. And then they shut down their nuclear reactors. They don't have any power. They don't have any power.
Right. There is no power left, even though there are safe ways to provide nuclear power now. Americans are freaked out by the specter of 3 Mile Island. So, convincing the public that nuclear is a good alternative, and it is.
It's a very good alternative.
It's going to be very hard. And one of the things you've seen in the last 6 months or so is that there is enough failure in particularly wind power in facilities. So private financing for wind power companies it's dried up. The cost of capital to be in the renewable arena is very high.
It's extremely high. And there's a point when the government, can't support everything. We're $34 trillion in debt and just signed a ridiculous budget of $1.2 trillion, which will prove to be interesting how that sits with everybody. And yeah, they can't fund this.
So
with subsidies, that's what I'm referring to with subsidies.
So here's my take on this. I think the chances that oil goes below 80 by much and stays there for any period at all is, I wouldn't bet on it.
I wouldn't either.
The chance that it goes to 90 and maybe higher in the next 3 or 4 months, I would bet on that.
Oh, I absolutely would. And remember, we're in the slow time of year, but we're just getting to the spring vacation and then the summer driving season when things pick up. And given what a nightmare it's been for so many people to get on an airplane, especially if it's made by Boeing, a lot of people may just opt to drive this year, thinking, well, it takes a little more time, but at least I'll get there safe and sound. So I think that's a big issue. And I think you're exactly right. And I think for our viewers, there's still some very, very good bargains out there, even though the energy sector has really had the best quarter it's had in some time. But there's still some very good deals. Chevron still yields over 4%, and you're buying one of the safest companies in the world who's in the process of buying Hess.
I think that actually, if you look at all the big oil companies, every one of them, Exxon, BP, they all are sort of on the cheap side, aren't they? In terms of when you look at sort of standard metrics like PEs.
Oh, absolutely, they are, and they all yield at least 3.5 to 3 3/4, like Exxon does, and I think BP and Total yield 4% plus. And I think for investors that are looking for passive income, but also want to catch this move in the oil industry, there's a lot of really good deals out there.
Yeah, and they've got rock solid balance sheets. So
absolutely.
So we're going to be back in the next 2-3 weeks. We're going to look at oil again, and my bet is that when we do that, when we're back to see everybody, it'll be $90. So we'll see if I win the bet with myself.
I think you could be exactly right. It was interesting. We just recently published a post on 24/7 of MLPs, the high yielding MLPs,
sure,
which are outstanding buys right now, and with yields from 7 to 9 and higher. And I think that's a good place for folks to look as well if they want to be in the sector, but they don't want to be tied to these swings in prices, because master limited partnerships have contracts with the major oil companies that are pretty much set in stone.
Right. Well, there's something else to look at, MLPs and the big oils. We'll be back soon, and we'll see if I'm right that when we're back, it's $90.
I bet you will be.